Secretary Scott Besson, Secretary of the Treasury, actually speaking today at a community bank event. Deregulations are coming. This is critically important to the 18.6-year real estate cycle. I'm going to explain to you why you have to be aware of these deregs and what it means for you coming up in late 2026. Welcome to the Self-Storage Report. I'm your host, Chris Berg, also known as your AI storage guide. Do land acquisition for Abernathy Development here in the great state of California. Is with me, as always, the one and only Rad Thad Thaddeus Campbell with S3 Partners. Thaddeus, good morning.
How you going to say Slytherin there for a second, Chris? I was getting a little bit worried. I'm doing great, man. I've been so excited to have Terry come and join us. I dressed up, man. I put my Sunday finest on because Terry is royalty in the self-storage community. And we certainly have been looking forward to him joining the show as our insurance partner for a while now. So Terry, thanks so much and welcome to the show.
Thank you guys so much. And I appreciate the opportunity to partner with you guys. And Chris, I'm sorry you're being outnumbered 2-1 by Campbell's today.
The clan wars are on, man.
That's it.
That's great. That's great. Terry, man, we're so excited. And it was kind of interesting. We talked about this a couple of months ago. We've been planning this, you joining the show, and we started it off for the beginning of the fourth quarter. Just worked out very smoothly, but we've known for a few weeks. I thought it was very interesting. I was up at NISA last week for the New York Self-Storage Association fall show. And insurance was a massive topic on two different panels that they had, both the operator panel and the banking panel, how critical of a role insurance is playing in self-storage right now. So I thought it was kind of cool that in the lead up to you coming and joining the show, we're hearing so much about how insurance is playing a big role, the increases in premiums, the increase in costs, and really challenging self-storage owners to keep their NOI where it's been over the last couple of years as these premiums are increasing. So excited to get your take on what's going on in the market, why that's happening, and maybe more importantly, how can people help themselves kind of curtail some of that pain?
Sure. Well, it's definitely been a topic for a lot of folks, for the banks, for the borrowers, for the sellers, for everybody involved, because it is definitely affecting deals and making them not work anymore. It's crazy. I remember just a couple of years ago, 2 or 3 years ago, the portfolio that I'm part of, they were looking at a facility that the current owner was paying $4,000 a year. We put in 8 and it ended up at 12. A little bit of what's going on and what's driving that is, there for a couple of years, there was just like unprecedented losses from catastrophic events, fires, tornadoes, hurricanes. There was just so much of that going on. And, some of the things leading up to that is you had folks that were underinsured. They did not have replacement costs as they should be because prices have gone up. You've had inflation. You've got such a litigious society out there now that drives the cost up as well. There's so many things that happen. So take those things and add to it the fact that the insurance industry, much like the banking industry, you've got to have a certain amount of cash reserves to satisfy the government. The cash reserves were getting depleted because of all the things I just mentioned. So, how do they increase their cash reserves? By increasing rates. That's how you do it. So you had sort of a perfect storm. You've got all these things that were driving the cost. Number one, like I said, to get properly insured, they were having to raise their replacement costs. So they needed to be covered for more than they were. The expense, the cost of things just going up. And then you had the rates. All these things kind of hit at one time. And then the rates have gone up, steadily for the last probably 3 years. Now, the good thing, what we're seeing is that we're starting to see signs that the rate increases are starting to level off. Doesn't mean they're not going to go up anymore. It just means they're starting to level off because things are getting back to sort of where they need to be. So that's going to be very helpful. Now, people shouldn't expect that it levels off and now your insurance goes down because you're always going to have appreciation. So your replacement cost is going to continually be higher. So your cost is going to be higher. Even if your rate stays the same, your cost is going to be higher. So these are some of the things that have really increased the cost of insurance over the last, let's say 3 years or so. But the good thing, like I said, is on the horizon. It looks like the rate increases are slowing down and getting closer to level. I'm not sure saying they are. We're just seeing positive signs in that direction, which is going to be helpful.
for us as developers, Chris and I are in the development game, but even people doing acquisitions, having a target at least helps, right? It's when you don't
Yes.
have a target to aim for, as you said, you underwrite to 8,000 a month, and all of a sudden it's 12,000 a month.
Yep.
Takes a big hit out of your profit. You and we're going to talk a little bit about your experience in the self storage industry, but you decided to go down this road with Johnson Insurance Services. We're certainly really glad you did. You're building yet another vertical in the self storage industry. As you've been talking to owners and developers and people that own portfolios over the last year, what have you found has been the biggest issue that people are facing in their current coverage, and how can you help them fix that?
Well, some of the things that we've been finding is number one, they're just not insured for the proper replacement costs. They've been underinsured in a lot of cases. Some of them also have unknowingly or knowingly been not in, not ha- they didn't have customer goods legal liability coverage or sale and disposal cover. I will never recommend someone not have those because those things, it's not necessarily if there's an award given for a certain amount that the customer has lost, so to speak, through some issue of negligence. It's the attorney fees, it's the legal fees and costs that you can really incur. So underinsured, not having all the proper coverages, those are some of the bigger things that we've been seeing.
Listen, you guys are going to be able to reach out directly to Terry anytime you want. You'll see down at the bottom how to get a hold of them, and you can set up time to communicate with him at Johnson Insurance Services. Certainly encourage you to do that if you have questions. He's an absolute, as I said, he's an icon in the self storage industry. I'm going to pivot a little bit, and I'm going to kind of show people how much you know. You're not only someone who's doing insurance. You obviously, the people that know Terry know he's the guy responsible for Live Oak Bank being such a major presence in the self storage industry, had their biggest year ever in 2024. The mentees of Terry Campbell that he brought into Live Oak Bank, you really were well rounded in this industry. Something happened a couple weeks ago that Chris and I found fascinating and sort of is a trend in the industry. SmartStop acquired Argus's self-storage management platform.
Mhm.
It was a $21 million cash upfront deal, another 324,000 shares, OP shares of SmartStop, around another $11 million in current day value. I'm interested to get your take on that merger, that acquisition, whatever you want to call it, however it's structured, and maybe what that portends for the trends going forward in self storage.
Well, I don't know much about the details. I did know that had happened, and it kind of caught me off guard because I know Argus has built a really nice portfolio, and to be purchased like that, it was a little bit of a surprise, but that's the way the industry keeps going. It's what we've been seeing the last several years. When I got in this industry, it was almost all mom and pops and public storage, and now there's so much acquisition going on, and the companies keep gobbling up the companies like Argus, and obviously they saw that as a good play because of the structure of the portfolio, the size of the portfolio. It wasn't small, and I'm sure that there are really good assets in there too. I think it
Yeah,
was
I
a
mean,
good move.
it was fascinating. I mean, I think Ben Vestal. Shout out to Ben Vestal and congrats. He was the gen who started. Very close friends with Barry Sherman, the president at S3 Partners out on the Colorado SSA board. I think they were managing somewhere in the 180 facility. I was kind of shocked by the deal in that Argus didn't actually own any of those facilities.
Yeah.
SmartStop, Chris and I have great regard for H. Michael Schwartz and what he's doing at SmartStop, but $33 million, 21 million in money and another 11 and a half of shares for the management portfolio kind of speaks to what's going on in the industry. Chris and I
Yeah.
have been talking about a lot of the headwinds and some of the negative headlines we're seeing for storage, yet you're still seeing these massive acquisitions happening. I guess speak to that a little bit from your experience also, because you're involved as an investor in a portfolio and a couple of other facilities as well.
Yep.
It's not like self storage is in serious trouble right now, it seems.
Right. Right. And buying that, like you said, just the management portfolio, that's not terribly common. So obviously they have some plans and they see some good opportunities in there. And as speaking to the portfolio that I'm part of, I'm a part owner in 11 different locations myself, or an investor in 11 locations. And they have, for the most part, I've got one in particular. Okay. I'll just mention it. The one in particular, which is, I call it the crown jewel for me, because it's a Kissimmee. It's 3-story building. We have it. It's actually managed by Extra Space. And that thing has been just a phenomenal asset since the day we opened. We actually hit our break-even numbers a year ahead of time. And it's continued. I mean, there's just not a lot of great places to build in that actual market that we serve. In fact, I don't think there's any, because we've tried to find them to expand. And it has been fantastic. So that one's been great. It's down a little bit from what it was at the peak a couple of years ago, but it's still doing great. And across the rest of the portfolio, and talking with our guys that actually run them, they're saying they're doing good. They're picking up. Occupancies are coming up. Rates are coming up. So we're seeing signs of coming back to life and moving back in the right direction. Hopefully we've seen the bottom. But I think a lot of that is still, in my mind, determined by when mortgage rates go down and people start moving again. I think that's going to cure a lot of ills in my mind.
Terry Campbell, again, thank you so much. Such a pleasure. We're looking forward to having you on every quarter to come and share your knowledge, especially as it pertains to insurance, but obviously your knowledge of the whole industry. We're excited to pick your brain as things come up, and look forward to having you back on. You can see the link to Go Johnson Insurance at the bottom. You can reach out directly to Terry as well. If you do reach out directly to him because you saw him on the podcast, we please ask that you reference the podcast for us. Chris and I would appreciate that. But Terry Campbell, look forward to having you back soon.
Thanks,
I just
guys.
want
I
to
appreciate
say
it.
one thing, Terry, if you can just stick around for a moment, and just because of our tech here, you may not be able to stick around for this clip, but Thad, it's unbelievable. Like, Terry has no idea what the rest of the rundown of the show is. He just did 100%. The perfect lead-in, because we're about to play a clip from Neil Kashkari, Terry, that talks about, hey, even if the Fed rate goes down, the 10-year might not. And so thank you for that perfect toss to our
transition.
I can see into the future. I can see into the future.
We call this the Nostradamus report, so you're a good addition to it, my friend.
Thanks,
Terry
guys.
Campbell, thanks so much. We'll talk again soon.
See you. Take care. Bye-bye.
Terry. I mean, that was unbelievable. So great job. Thank you, Terry, for joining us. And as Thaddeus just mentioned, the Nostradamus report that a while back, talked about, hey, one of our concerns here is even if the Fed rate does go down, what is it ultimately going to mean for the 10-year? There may be mixed reviews here. We're going to talk some more about some of these deregs and how it could impact some yield curve control. And Neil Kashkari from the Minneapolis Fed spoke, I think it was earlier this week. And he said exactly sort of what Thaddeus was alluding to earlier. Let's play the clip.
A lot of people are saying we want to see the housing market unlocked. They're hoping that a few cuts to interest rates are going to do it. I'm not convinced that a few cuts to interest rates are going to translate into very much lower mortgage costs, because so much of this investment capital is going outside of the housing sector or the apartment building sector.
Your thoughts?
Spot on. And again, we were joking about the Nostradamus report, but we've seen it play out, right? I think I haven't checked the 10-year treasury today. I checked it, if not yesterday, the day before. Is it the 4.12? I think it was at, has stayed pretty steady or even risen a little bit since the Fed cut back in September. A lot of talk now about whether there's going to be another one this month or if they hold steady. I think that's a fear that the Fed has to really be paying attention to, that if we continue to cut, I saw something today where they're talking about having it down to 3 by the time we get to the 2027. Well, is that really going to accomplish the goal that the cuts are aiming to do, which is they're saying they're cutting rates because of the lack of jobs. Obviously, housing is a piece of that in the background. But I would say this, if they cut again and the 10-year starts to trickle up more, it's going to be really hard for them to keep cutting the treasury rate.
I would normally agree with you. And when you think about what presumably is going to happen come May, Powell's going to be out. Obviously, in the interview process, I mean, Trump is basically saying, look, I want the rates down to at least 2. Are you going to do that or not? And if you say yes, you got a chance to go to the next round. If you say no, you're out, right? So, I mean, that one's going to be pretty abundantly clear that you better be a talking head for President Trump. And I bring all this up because I started the show talking about the deregulations. It's really hard to measure those, but you can start to see that as community banks or other liquidity comes in the market. And I want to sort of lay some context here, Thaddeus, and then get your reaction to this, because one of the really critical things that if you read the book, again, that Thaddeus and I talk about a lot, it's about the 18.6-year real estate cycle by Philip J. Anderson. He says, look, every single time it gets really frothy, he calls it the winner's curse. and then things go pop. Well, what he talks about is that every time this has happened, typically there's been a GOP administration. They go back in and they do all this dereg that obviously the other side of the aisle was putting in place. And that's exactly what's happening right now. They're trying to get rid of what's called the Basel Accords. This is not my expertise, but they're trying to load the leverage at the banks. And I think what they're going to start to do is say, hey, banks, go get more aggressive. In fact, today, Secretary Scott Bessent spoke at this community bank event. And basically, I mean, when you listen to it, I've got it up on my LinkedIn page. He's like, hey, go get offensive. He didn't use the word aggressive, but he definitely said, go get offensive, get out there. And I was talking to a guy in the capital markets earlier this week, and he says, look, what's happening right now is these banks are coming out. They're putting more liquidity in the system. They obviously can do incredible rates and 35-year amortizations and some other things that these other capital market guys just can't compete with. And so he says, what's happening now is this other capital is starting to move out on the risk curve. And then if you follow what, again, the thesis is around the 18.6-year real estate cycle, this is where Thaddeus and I believe come the middle, end of 2026, things start to go pop in the land market, not necessarily the real estate, the stock market, but in the land market. So I just want to get your take, Thaddeus, on how you're processing what you're hearing as far as these deregs, liquidity, things moving on the risk curve. What say you?
I am obviously, my one of my goals. We're in self storage heavily, but I'm setting out to build $2 billion in small bay flex. And as I have these conversations, it's going to take some serious debt, right? You're talking $1 billion+ in debt that we're going to have to go secure for that. One of the conversations I've had recently is about a program that's being rolled out for community improvement type opportunities. And Small Bay Flex is a place for small business owners to get out of their house, to start growing nascent businesses. Kind of fits into that wheelhouse. We'll get this. Low sixes on a construction loan, 3 years to lease up to get to economic stabilization, no interest, 1.15 DSCR. That's what you have to qualify for with your underwriting on a model. And for those of you who aren't super into development, let me tell you, those are extremely low thresholds, high on the lease up side, getting 3 years to lease up instead of 2. And so you're just like, as you said, this desire to get more capital into the market at lower interest rates. The question is, in the long term, is that something that's sustainable? And, every time we've gone through a real estate cycle, I've been alive for 2 of them. I was born into one of them, late 80s, early 90s with the savings and loan crisis, and the early 1970s, it was the gas crisis. Of course, in 2008, the GFC. It's hard to imagine that we're not coming up to another cycle, quite frankly, with what we're seeing happening.
We'll see. And I think part of what is important to know, since you were talking about the 10 years, that when you start to eradicate or change these Basel Accords, which are the leverage ratios within the banks, now the obviously Secretary of Treasury, the Fed can start to, I don't want to say push the banks, but happily nudge them towards, hey, now they can hold more treasuries on their balance sheets, thus potentially trying to drive down the 10-year. And look, Scott Bessent is a financial wizard, right? The guy's brilliant. So I'm sure he's starting to pull some of these strings and say, hey, this is what we can do with some of these banking situations to help drive down the 10-year, make the housing market more appealing. The concern is going to be, as you're suggesting, a 1.15 DSCR. All of a sudden, there's more people unemployed, not necessarily in your asset class, but housing and whatnot. The mortgages can't get paid, and poof, here we are again, things blowing up. And the one thing that stops this, as we've talked about before, is World War III, which is, there's definitely a probability. Look what's going on across. Yeah, we don't want that to happen, but that's the one thing that could sort of squash this thesis. And then we say all this because I'm sure some of you have been watching the Wall Street Journal or whatnot, but there's now this thing called the debasement trade. I think we've got the graphics, Thaddeus, if we want to bring those up. But if you haven't been watching, Bitcoin all-time high, gold all-time high, silver today hit 50, which was another ATH, at least for a very, very long time. So when you see all this capital moving towards either a Bitcoin or precious metals, I think it can create some concern about, hey, who's going to start buying up our debt?
Chris, I'm trying to find your graphic, my friend, and I'm not doing a very good job of it, so I apologize. My job as the back end producer is going to get taken away from me here. This is not what you're looking for.
It's all
That
good.
is
I
not.
thought that maybe you had, because I know you'd sent me some stuff through the week about gold and Bitcoin. So I didn't know if you had those made into graphics or
You
not.
know
But
what? I didn't. That's my fault. I was supposed to, and I don't have them on. So I'll take the blame for that. To the point, and I'll say it right. On the same day, we saw gold break $4,000 and Bitcoin break $125,000. Right. So they both hit all time highs. I think it was 2 days ago. Together, almost at the same exact time. And so we've been talking for a while about the volatility of fiat currency. You're talking about Scott Bessent, and great. He's a financial genius. That's fantastic. What I don't like as an individual citizen of the United States or the world for that matter is that one or a few people, however smart they are, can pull levers in currency that affects the value of my currency that I currently have, right? So this is the danger of holding currency. And it's why Chris and I obviously believe so strongly in holding assets, whether that's real estate, whether it's crypto, whether it's, and of course, we know now the central banks and the US government, they're all trying to get cryptocurrency that they have control over because they don't want to lose that ability to pull those levers. So listen, as we say every week, educate yourself, understand what's going on. We may not be right about the 18.6 year real estate state cycle. One thing we are absolutely right about is that fiat currency is, you aren't in control of what the value of your money is, period, end of story.
I want to get your take on something around this, because I saw this as well, where there's so much capital now going into like a gold, a silver, a Bitcoin, or these other, we'll call them alts, if you will, that there's a really low demand for people putting money into real estate. So it's just typically you're like, hey, I'm going to hedge inflation. I'll go buy some real estate, especially from a residential standpoint, like maybe a few more rentals or whatnot. But I think people, and you and I have had this conversation, are starting to go, why would I go buy a few single family home rentals where I got to deal with tenants and when gold's hitting an all-time high, all I got to do is sit on my couch and eat Doritos, or I can buy Bitcoin and sit on my couch. It's so just, how do
I
you
want
process?
to I want to show you something that's absolutely crazy. I did my job as the producer on this one, so I'm going to pull this up. This is a gentleman named Ryan Pineda. I've had the good luck of having met him live and in person at an event. Really down to earth guy. Christian, if you follow Chris and I, you know what our thoughts are on that front. I highly suggest you follow Ryan Pineda. He makes his living flipping houses in the Las Vegas area and really has transitioned now. I'm having a hard time talking today. A transition, does a lot of education, and his education is in the flipping single family residential house space. Here is a Instagram post that he did a couple days ago. There were multiple slides, and I'll give some context to this. He came across a listing for a rental in Las Vegas for $6,000 a month. He knows that that house is worth $2 million, which means that the mortgage alone, without any HOA fees, any upkeep costs, nothing, $12,000 a month. So if you can rent a house for $6,000 a month, that you have to spend $12,000 a month in base cost just to buy, why buy a house? Why invest in that single family real estate? And so you see this post from him. I truly believe that many people would be better off renting their primary home instead of owning. To your point, what creates that environment where you can rent a home for $6,000? That the market has gone bonkers, right? And people have overpaid for homes.
Well, and I guess again, if you just said, hey, buy assets, right? So yeah, I can use my home as a store of value, but also if I just think about time and money, like the average is what, a 3% growth rate on my home, but then I've got insurance costs that could go up and upkeep and all these other sort of variables where again, you look at the CAGR of Bitcoin, I don't have the top of my head, but it's a lot more than 3% a year. I know that, right?
100%, significantly higher. And so this is one of those challenges that's being posed to this single family house. It used to be you would think of the equity in your house like, I have to pay for somewhere to live. So what I'm paying for my mortgage is a necessity. And then the increased value over time is the value. The problem is there's no cash flow being generated from that house. What you're seeing now is if you could start going and renting a house for significantly less than it costs you to own it, the long-term increase in value play is nowhere near as beneficial to you.
Well, especially if you're taking that spread. And look, I'm not promoting any particular asset class. This is not financial advice, but if you're taking that spread of what it costs me to own versus what I'm renting, let's just use a grand a month for easy math, right? And I'm putting that into QQQ or Bitcoin or whatever it might be. It just
100%.
to make sense. And so with that being said, though, I do think that there is, and I'm hearing more and more resi guys going commercial, commercial, commercial. So hopefully we've got the graphic of the one that shows the self-storage and how it's been a really steady asset.
That I do have, my friend.
Okay. And
That
so I
I
just
do
want to share
have.
this with people to kind of, pat ourselves on the back here that are in the industry. This is a recent study that was done, shows the trailing 3-year returns. And I just think that graphic, look, a picture is worth 1,000 words. I can't wait to hear your interpretation of that. But when I see, number one, self-storage, okay, dipped for a little bit, but now it's, back up, doing extraordinarily well in comparison to maybe industrial has just been crushing when you've got Amazon and those kind of things going on. But I to see the steady performance, and again, if you're going to invest in real estate, I think most real estate people are saying, hey, where can I put this capital, get some tax breaks, but just know that it's going to give me that consistent return, consistent growth. It's sort of like buying a coupon. To me, I was very excited to see this.
Yeah, this is a statistic that I've known for a while now. The first time I interviewed Alex Burnham back in 2023, he mentioned that self-storage was the highest performing asset class of the previous 40 years. Hard to fathom, right? Now, that did not account for some things that didn't exist 40 years ago, like web stocks and Bitcoin and the like. But when you take a 40-year time period and you are the highest performing asset, and not just real estate asset, by the way, but asset period, that speaks to the longevity and the power. And it's one of the reasons we're seeing things like SmartStop acquiring Argus's management company, because the returns have been proven out over a long period of time. Chris, I don't think there's any reason, and we've talked about this, to believe that that trend is going to change markedly, even though, as Terry Campbell mentioned earlier, we'd love to see an increase in the housing market and movement in the housing market. The reality is, if we start seeing less people buying homes and renting becomes more of a common factor, people rent smaller places than they buy typically. People move more frequently than they're renting. There's still going to be reasons to believe that storage is going to be okay long term.
Well, I want to share some with everybody here, because I do want to get into the AI storage guy aspect of things, but also if you're someone out there who, look, you've got a bunch of liquidity, you're looking for some good assets to buy, I would encourage you to start looking around and kicking around, what's happened in the world of self-storage. I think you can, again, this is not investment advice, but typically, if you've got a good operator, a good GP, you're going to see some fairly, at least, steady returns depending on how things go in the economy. I want to share this with people because, as you've heard me introduce myself as the AI storage guy, I've been using AI a ton as we're going out and looking for acquisitions and trying to find good pieces of dirt that work. Well, I think one of the most challenging things before I got more adept at AI was, okay, now I found this piece of dirt. What's the zoning? What's the FAR? Like, how can I build here? How high? What can really get done? So I just want to encourage people, if you've got ChatGTP, I've got the Pro. There's a thing called Deep Research that is like having.
I'm going to break you of the habit of calling it ChatGTP, or I'm going to rename you from the AI storage guy. I busted Chris's chops earlier this week.
Did I say it right that time?
You got it. The P before the T. Remember, physical therapy for your brain. It's ChatGPT. That's great.
I feel like I say it right every time, but apparently not. So you can see it up there in the corner, but it is what it is. So point is, and even if you don't use chat, there's obviously other, ways out there you can utilize this, is that it is so powerful, especially if you use this deep research thing where you can go in and give it some really powerful prompts, and you can see my prompt here. I had to do actually a full feasibility study. I want to see, hey, if you were going to underwrite this based on the last 24 months, what would you underwrite a 10 by 10 C by C for climate control? It can talk about what's the demand within the market. Again, it's AI, so I wouldn't trust it 100%. And yet it does start to at least give you some parameters, some ways to look at the assets. Then you can go in, I think what's really powerful as well, and I'll share with you how robust this thing is. So it asks you some follow-up questions, and then you come in here, and it gave me this local site and overview. I think what's also really good, Thaddeus, is you can go in and say, okay, now give me, 5 or 10 reasons why I should do this deal. Give me 5 or 10 reasons why I shouldn't do this deal. So you start to treat it almost like your investment review committee. But you can see it gives you the demographics, like what's the demand based on population. You can ask me obviously how to, hey, go scrape all the city documents and tell me how many housing starts can I expect over the next, 12 to 36 months. And so it is very, very robust. I don't know if you've seen something like this, Thaddeus, yourself, but I think it's really powerful. We can start to leverage basically your own like feasibility entitlement assistant to go do a bunch of work while you're doing something else, and then come back to something like this and go, okay, this makes sense. Now let me do some more homework, maybe reach out to the city, find out what actually is getting done, what's not. But it gives you a really powerful base to start.
Yeah, I think to your point, it's the speeding up of your time, right? We're always searching for more time, and the ability to utilize AI to help compress decisions in time is incredibly valuable. Of course, if it's telling you that this is a go, you're not going to forsake all the other things that you were doing before we had AI at our fingertips to verify what it's saying. What I think you're going to find over the next year, maybe even quicker than that, but definitely in the next year, 2 years, 3 years, is we're going to start to have a track record where we're going to be able to trust this that much more because of the nonstop success rate. It's not going to be perfect at the beginning, but it learns, and it learns very quickly. And so I mentioned this to you earlier this week. I put posts that I write for LinkedIn into GPT every day and have it edit them for me. When I ask ChatGPT now to do a thesis for me without inputting something first, it writes exactly like I normally write. So
Wow.
the level of learning that it's doing, you'd be crazy not to be using it. There's some great people in the AI space in self-storage now that are really assisting. I'd be remiss if I didn't shout out our friends at Tract IQ and what they're doing in this space. We're not going to tell you guys what it is they're doing, but they're about to launch a new service on their platform that's tapping into this. How do we compress time? How do we get you to a no quicker? Maybe not a yes quicker, because yes, we're going to get it through the filter, but you're still going to have to do your real deep work on a project that might become a yes. But man, the quicker I can get something into the no bin, the better.
Thank you for bringing up our partner, data partner, Tract IQ. Again, if you want to find out more, go to tractiq.com. What I would encourage you to do as well is you can go in there. They've got these really powerful executive summaries. And so one way to help enhance, if you will, the use of AI is you take this executive summary, put it into Chat GPT, and then you can say, hey, start asking it questions, ask it to do a feasibility study. And I think that you speak to this really well from a standpoint. Look, we're not suggesting you can take a Chat GPT feasibility study and go to a bank. That's not it at all. But again, it's just a foundation to help you use it as almost an investment review committee and go, maybe I didn't think about this. I've used it in the past, Dad, where it's shown me, hey, there's actually a potential site that's being planned here that, none of the other tech I've got has shown me or told me about. So it gives me another variable to go, okay, you know what? Maybe this isn't the right location because there's more supply than I thought coming on.
Listen, a well-regarded feasibility study in the self-storage space right now is low five figures, right? So you're going to drop 10 grand or a little more on that. And so you want to do everything you can before you write that check. You don't want to write that check, when you saw a site, you think it's okay. So be $20 a month for ChatGPT to be able to utilize the service. My friend Eric, who's our producer behind the scenes, many of you guys know Eric. He uses Gemini because it's only $14 a month. So you might be using Google's version too. That's okay too. But you'd be crazy not to utilize the level of depth and the amount of research that it can do. As a human being, you just cannot scrape the number of sites and do the research that it's able to do for you. So really crazy to see what's happening as a 52-year-old who grew up without a cell phone and without a computer. And I got my first email address when I was in graduate school. It's exciting to see, but it's really crazy to see how quickly it's taking a hold.
Well, and again, as you talked about leverage, right? Every person that's wealthy understands leverage. And so I can go put in this prompt, Chat GPT, and deep research will go do its work for 10, 20 minutes. And then it pings me when it's done. So I'm off doing other emails, doing other things, and all of a sudden, ping, like now I can go take a peek at this thing. So very, very powerful. If you have any questions, you can reach out to me as your AI storage guy. And I want to wrap things up. Thaddeus, I know you got a great story you want to share about a buddy of yours.
Yeah, I came across this, Chris. You and I know that our faith is so important to us, and we're both driven to mentor and to motivate other people to live a better life, to live a happier life. I have a very close friend. A lot of you guys know that I was a former martial artist and I spent a lot of time in the Tiger Showman's organization. When I was 33 years old, I started a amateur kickboxing career. My second fight that I ever had on the card with me was a young 17-year-old named Nick Pace. Nick Pace would go on to fight in the UFC, actually fought one of the handful of guys in the world who's considered the best MMA fighters of all time, Demetrius Johnson. I thought he won. I wasn't the judge, so unfortunately, Nick didn't come home with a win there. He now runs one of the most successful martial arts schools in the country out in Staten Island, New York. Love the kid. And I got a clip from him teaching a class, and I just wanted to share with the audience an example of how one human being can help other people in a really profound way. Forgive me because I had this halfway through the clip, so we're going to start again.
And someone comes up to you and they're like, that was amazing. You did awesome. Then how do you feel?
You feel good.
Just good?
You feel awesome.
Feel awesome. But when you do something really well and someone comes up to you and they tell you great job and how good you did, it makes you feel even better, right? Wait, what happens if you do something and you know you did it wrong, or maybe you failed a test, or you lost a baseball game? How do you feel? How do you feel if you lose, Parker?
I'm sad.
Feel sad. How do you feel if you lose or you do something bad and then somebody goes, oh, you lost? You lost. Then how do you feel?
Even more sad?
Even more sad. But what you just did with your partner right there, telling him good job, even though I told you to do it, is something that you can do to build someone else's confidence. You build your confidence by achieving things, but you can help build somebody else's confidence by telling them how good they did. Or if they mess up, telling them it's okay. Do you understand? Who says that?
Shout out to my friend Nick Pace. I just thought that was so motivating and so uplifting. I wanted to share it with our audience. And listen, say a kind word to someone today. Give them a pat on the back. Let them know that their work is noticed and appreciated. And if they're failing, even more, reach out a hand and help them out. See what you can do to inspire instead of put down. We have more than enough people in the world putting other people down, dragging people down. One kind word goes a long way. So I thought that was really powerful and wanted to share, Chris.
That is.
Yep.
Good job today, bro. Good job today, man.
I appreciate you, my friend. Thank you so much.
And to Eric, I mean, Eric, I just, you don't get a chance to meet Eric, but he does an incredible job in the back end with the production and the short clips he puts out. And so just to both you guys, thank you very much. And of course, to Mr. Campbell, the famous last name Campbell, we appreciate his insight today and one of our new partners here on the Self Storage Report. I'm Chris Berg. That is Campbell. Thanks for joining us. We'll see you back here Wednesday instead of Thursday next week. But Thaddeus and I'll be out, so be sure and join us live this coming Wednesday here on the Self Storage Report.